Hi, my name is Damien Boey. I work with Wilson Asset Management. And today I just wanted to give you a few snippets about how we're seeing the world. Investors are worried about a great many things, ranging from inflation to the state of the economy and rates to even geopolitics. But of these concerns, we think that right now inflation is probably the greatest concern. Now, inflation in its own right has some future consequences. One of them is that it makes bonds and stocks move together, particularly when you're uncertain about that inflation, as people are. Now, how do you deal with the fact that bonds and stocks are moving together? Well, it means that you don't really get the normal level of diversification that you would expect in a multi-asset portfolio. Therefore, you need to go outside of that universe in order to find the diversification that you're after. The good thing in Australia is that we have such an exposure on offer, and that of course is commodities. So we really like resources as a way of getting additional diversification. We think that also with the US dollar weakening and China are likely to stimulate in the next little while, that these things will additionally support the resources sector. In Australia, we think that the cycle is actually very good, that we will probably see double-digit credit growth, and we will probably see the Reserve Bank not cut interest rates anywhere near as much as the market's thinking. This is a little bit negative for government bonds, 3 and 10 year. It can be good for parts of the economy, particularly the housing sector, which we think will really benefit from credit growth and shortages, population growth, and so on and so forth. So to position for this sort of thing, you want to have a lot of property exposures, whether you're talking about the few builders that are left in the index, or even the discretionary retail names. Some of them do offer you some housing exposure. As we go forward, we do expect to see a little bit of volatility because we think that inflation could reaccelerate globally. We could see further undermining of the credibility of central banks. And to protect against this, really you want to have a little bit more of a value stance relative to a growth stance. For the most part though, the plumbing at the moment is holding together for the system. And so that should generally be supportive of markets, but just be aware that inflation scares, volatility scares can always cause a bit of rotation along the journey. Thanks very much for your time.